Hey friends, welcome to TradeQuest Weekly Trading Trends. I am Raju Angadi Vishwanth here, a founder of TraderSet, a certified financial technician from IFTA US and a SEBi registered research analyst with more than a decade of experience in trading and researching in financial markets. I do mainly trade the indices, Nifty, Bank Nifty, as well as precious metals, the major commodities, and the other commodity indices. So that's a brief about me. Come, let us have a sneak into the weekly trade quest for the first week of December 2020, how the markets are paired. Let us have a recap before that. Then we'll start with the trends. Let's decode the trends chartically, and further let's establish the key trading clusters for the week ahead. As we always say, if anybody fails to plan, they are bound to fail. So better plan the week with us and join the TraderSet community. If you are not liked or subscribe to our YouTube channel, please subscribe to our YouTube channel Traders Hut and start your journey to learn, earn and prosper with us. So let us start with the recap of the week 1 of the December 2020. Nifty gained 110 points, almost 0.85%, closing just tad below 13,000 levels, around 12,968 for the week. At the all-time high still, well, the Bank Nifty modestly gained 373 points, closed around sub 30,000 levels, 29,609 for the week. The major gains were seen in the broader indices like mid caps, small caps, metals, reality, autos also performed a bit, while the 3 to 6% gains were seen in metals, mid, small as well as reality indices, with banks gaining modestly 1.2 1.3%, while PSU banks gained whopping 6% for the week. Rest of the indices like energy, IT, pharma closed flattish to mildly positive for the week. Gold and silver, it was a bad week for the precious metals. Gold lost 4.1%, while the silver lost 5.1%. Anywhere between 4 to 5% we have seen the losses in the precious metals. While the crude oil gained somewhere around 237 points, around 7.5% for the week. So that's a brief recap of the last week of the November 2020, how the equities as well as commodities paired. Now let us have a sneak into the equities weekly trends and let us get a gauge of the open interest data along with the VIX, how the week can pair out, which will give us a weekly options data, a broader range for the equities before getting into the chartical analysis. So Nifty gained 110 points, 0.85%, as we discussed in the recap for the week, formed a doji candle on the weekly charts, hinting there is a confusion and a fight between a buyers and the sellers. Well, the call side open interest for the weekly options for a truncated week, as we are seeing a Monday holiday. Tuesday we are seeing around 13,000 levels, and 13,100 would be an uphill task where there is a highest open interest built on the call side. So it would be a hurdle and some consolidation can be seen with a rise. Any rises it can be sold into, a choppiness can set in, while 13,000 to 13,100 can be the short term resistance zones as per the OI data, while the put side open interest 12,900 and 12,800 holds to be the stiff support base, as we have seen a tug of war between the bulls and the bears. So broadly we can say 12,800 to 13,000, 13,100 can be the range for the Nifty. Even the broader market can continue to perform with the sectorial churning as well as the stocks. While the banks gained 373 points, Bank Nifty is gaining around 1.28%, forming a spinning top kind of a candle. After a stellar rally, uh, we can say it is a pause in a rally or some consolidation can happen. Any confirmation needs to be witnessed. While we are facing a stiff resistance near 30,000 and 30,500 in the Bank Nifty, on the call side, on the put side 29,500 and 29,000 put is clearly is what we are witnessing the downside open interest. So currently we are trading around 29,600 zones. So 30,000 to 30,200, which we have been discussing in our previous videos, have been a major hurdle now, which we'll discuss in chartical analysis going ahead. While the VIX gained 0.2%, closing at 19.8, formed a doji on weekly charts. Even the option premiums in cooling off the volatility with rising markets. The bank Nifty options are premiums are too high. Some consolidation can be expected, while 29,000 to 30,000 can be the broader range. So that's a brief on the equities weekly trends. Now let us have a sneak into the equities forthcoming week's trade setups. Mainly, let us reduce the key clusters, weekly clusters for the Nifty as well as the bank Nifty. Starting with the Nifty chartical analysis, again we see a upside hurdle for the Nifty around. Note these are all the spot levels: 13,011, 13,064 and 13,114 are the important resistance levels, which are the major hurdles for the bank Nifty, for the Nifty, while 13,200 needs to be decisively crossed for 13,314 and 13,450. Uh, this week that might not be expected, as we can see some consolidation going ahead. So 13,011 and 13,064 to 13,080 would be ideal selling opportunity, with 13,120 or 130 as a stop loss, while on the downside we can see 12,890, 12,856 and 12,775 to 12,760 can be a good support zones. Until 12,760 is not broken, Nifty can be a sell on rises as of now. The strategy would be, but medium term trend 12,720 to 790 can be a good support, while 12,570 to 560 is broken, then the major reversal might occur in the Nifty. So these are the levels which one can watch, and for the short term it can be a sell on rises as of now. And a range bound action, even the buy on dips with the clusters can be done at the crucial levels. So some consolidation is expected, at least as there is an indecisiveness in the weekly charts as well. But that's the chartical analysis for the Nifty. Now let us have a sneak into the bank Nifty chartical analysis. So it's been a clear consolidation from last week or so. We have touched the 30,000, 30,000, 190, 200 zones in the bank Nifty. Now 29,900 to 30,200 holds to be the stiff resistance as of now. Once and only if that is taken out, then we can see 30,567 and above levels 31,000, 31,500 levels. While on the downside bank Nifty we can see 29,374, 29,073, 29,129, 28,800 to 28,600 are the very important levels to watch out for the bank Nifty. So as of now 30,200 to 300 is not crossed. Until then one can sell the rises for 29,374, 29,129 and 28,800 back again. So that would be the strategy for the trading week. And if one wants to trade with the trend, one can buy on good dips for the positional targets again for the bank Nifty for 31,500 to 32,000 plus levels, with the dips of 29,100 to 28,600 levels one can see and buy, with 28,000 below as a stop for the higher target. So that's a brief on the bank Nifty as well as the Nifty as per the charts. The short term trading obviously, and 30,000 to 30,200 becomes a hurdle, while 28,600 to 800 becomes a good support or a Lakshman Rekha on the downside. If breached, we can see 27,400 to 600 zones. So that's about the bank Nifty analysis as of now. as well as the Nifty analysis. Now let us have a sneak into the stock watch. Which are the stocks where we have seen good longs built up? So any dips one can 165 to 170 would be a good base. Apollo tires can test 200 plus zones, 205 to 220 levels. The longs are seen in Apollo tires. Divis Lab we have seen some good longs. Cadila Healthcare 430 to 450 is a good base stock, can inch towards 500 plus zones positionally. Divis Lab can inch towards 4000 plus zones. Hero Motor Corp can test 3200 zones, 3400 zones, as we are in for a auto sales data. And PSU banks, uh, e- even if it is a technical rally, there can be some good rally. Any dips today one can buy. The Canara banks, where SBI is one stock which can see 260 levels with the 218 to 227 as a good base. Currently trading around 240, even 235 is a short term support. So PSU banks can set in for some more gains with selective mid caps like Bajaj Consumer. Exide is set in for 220 to 250. Bajaj Consumer can test 250, 270 zones with 180 as a good support. Suven Pharma is on a strong momentum above 400 now. Zensar Tech, Advanced Enzymes are the few of the stocks where some good quality broader markets outperformance can be seen going ahead. The shorts are seen in selective FMCG stocks, like some distribution is seen in Marico, Dabur, and PL is seen. Some profit booking also is seen in metals, but metals again can shine out today and continue, as base metals are on a strong trend, on a secular trend. Copper is almost heading towards 600 zones. So aluminum, zinc, these all are also outperforming. So even that's a brief about the stock watch. Use the clusters in the indices basically to establish the trade setups, particularly in the indices stocks. For the mid caps and the small caps, one can watch the secular trends and establish the trade setup. So that's it about the equities front. Now let us have a brief ad. In our next video, we are going to discuss about the US equities, Dow Jones and S&P 500. So keep a track, subscribe to our YouTube channel, join our Facebook community Trader Set, and follow us on Twitter handle Trader Set. So there is a brief ad before getting into the commodities trade setups. If you would like to get the research report and the trading advice from a SEBi registered research analyst Raju Angadi Vishwanth, from myself, join the Allied Trader Set community, learn, earn, and prosper with us. For any queries, you can contact us on traderset@gmail.com or +917829155900. To get your trial now, visit tradingview.today, click the link, and get the access to the free trial on the trading tips on Nifty, Bank Nifty, commodities, as well as stock futures and equities. Also, if you would like to learn, earn, and prosper and become a master day trader, grab your first free video on traderset.com/opt-in. So that's a brief ad. Now let us come back to the TradeQuest weekly trading trends, commodities trade setups, how the commodities paired. Gold lost 1245 points, 2.39%. Sorry, 4.11% for the week, while we have seen a dramatic fall in the gold, while the silver lost 5.11%, forming a strong bearish candle. Both of the precious metals formed a strong bearish candle, while the crude oil gained 240 points, approximately around 7.5%, closed around 3,350 odd zones. So that's a brief on the commodities trends. Now let us have a sneak into the commodities forthcoming week's trades. Gold is exactly near the crucial trading point around 48,200 zones, owns which is a 189-day moving average, and for even the 200-day moving average, 233-day moving average comes around 47,800. So 47,800 to 48,200 becomes a very important zone. Below that 47,400 and 46,450 can be seen in while that can be a remote possibility, still it is not ruled out. While what we are seeing in the gold now, we are near the crucial support, and also the monthly quarterly expiry and the gold what we have seen, that is showing some hurdle, so there can be some recovery in the precious metals going ahead. As we are trading in the adjustments can happen due to some premiums in the forthcoming months expiry. So starting with the gold as of now, let us have a sneak into the levels anyways though. So 47,800 to 48,200 is a very important support, and 47,400 is a major base which should not be broken at least. While on the upside 48,700 and 49,200 becomes a very important level until we see a major breakout above 50,200, and the larger degree trend reversal is not seen. So 48 700 to 49,200 levels can be seen if 47,800 to 48,200 is held on the gold. So it could be a buy on dips. We are taking a contra bet cautiously. As the expiry rollover also some premiums are there, while the silver are 58 at 600 to 59 100 levels are the very important support levels for the silver. 58 900 also becomes an important support. So above that 60,300, 60,650, 61,140, and 61,650 are the resistance zones. So oh, February month silver one can buy the dips until 58,900 to 59,100 is held on for the short term, and 57,800 and to 58,200 can be the major support for the silver, which we are seeing in the upside. As we have been discussing 60,000 650, 61,140, and 61,000 and 600 and 62,000 levels are the resistance zones. So once 62,000 is taken out, we can see a major shift in the rally, and the fourth wave correction can complete. So ABC EX has been formed is what the chartical analysis hint for the silver. So if the wave 5 kicks in, then it can be a fresh highs in the larger degree. As of now, the trend remains to be buy on dips for the precious metals. Else, as we are taking a contra bet this week, while the crude oil also the trend is strong. 3410 we are tested, and after some good rally we have seen some consolidation to flag kind of a pattern forming. Once we are taken at above 3,208 3,210 levels which has been crossed. Now the current support zones are 3257, 3192, 3280 levels, 3290 levels, which are the important levels, and 3308 is a short term support. While on the upside 3410 crosses 3567 and 3700 levels positionally can be seen in the crude oil, as we made a higher bottom and broken out of a some 3 to 4 months or even 6 months of consolidation from May to November of 2700 to 3100 levels. The 500-point zone has been clearly broken out. Now the upward trajectory is seen. So that's a brief on the chartical analysis for the forthcoming week's trade setups for the crude oil, and also on the Trade Quest weekly webinar from Trader Set. Thank you everyone. Have a happy and prosperous trading week ahead. Stay posted, stay tuned, subscribe to our YouTube channel, and be in touch with us to learn, earn, and prosper. Have a happy and prosperous trading week ahead.